All right, welcome everybody. Yes, it's that time again. Tuesday, live at 5 at Pharus Global. We are located at 1859 Southeast Port St. Lucie Boulevard in Port St. Lucie, Florida. So feel free to drop by and see us. We've got plenty of signage out there, so you can't miss us. My name is Brian Hartman, and I am partners in Pharus Global. We like to say that we help businesses from the cradle all the way to the grave, or more affectionately, the exit strategy. We have multiple entities and companies under one roof. You can check it out at pharusglobal.com, and we are happy to have some conversation with you. Today is episode number 19, and we are lucky enough to have with us the master of residential mortgages and then some, and he is the singing mortgage guy. We have with us Mr. Frank Lillo.
Hello.
Welcome, Frankie.
Hey, it's great to be here again. I was on a show way back when. What was it, about 150 shows ago?
Must have been, yeah, way back, maybe 5-10 years ago at this point, right?
You finally brought me back.
Today we're going to be talking about don't sign that purchase contract yet, and I'm excited to hear more about that. But first, Frankie, tell us a little bit about Pharus Home Mortgage, part of the Pharus Global suite of companies. Can you give us an overview of the company and where it fits in the Pharus Global ecosystem?
You know, I would love to do that because I really get excited talking about our ecosystem. Because it really has many benefits, not only to our clients, which we're going to talk about, but also to our employees. So, you know, we've got, for those people who haven't gone to our Pharus Global website yet, let me just quickly tell you the companies that we have. We've got, the original company was Pharus Group, founded 15 or so years ago, providing business management consulting and outsourced back office services, which is great stuff. We've got Pharus Funding Partners, which Brian knows very well. He managed that operation, commercial mortgages and small business financing. We've got Pharus Insurance, a full insurance business and personal lines of insurance. It's unbelievable. We've got Pharus Credit Solutions that provides help with personal credit repair as needed. And also they can help build business credit with no personal guarantees. That's really big. We've got Pharus Practice for my medical practice friends out there. I'll be talking to you soon. We do consulting services. We also help with revenue cycle management, outsourced billing and coding, and so many other great things. So that's great. Crestcore. Crestcore is our commercial and residential real estate operation. They help with sales, purchase, and leasing, as well as consulting. And then the Pharus, tell you the companies that we have an IT, and they provide enterprise level IT services and management. So, I have to mute my speaker there. And then for our clients, we basically offer a shopping mall for all of the business and personal financial and real estate needs. So why is that important to our clients? Well, probably can relate to the fact, I know I can, when you're out looking for your first mortgage or your first house, or maybe your first business, whatever it may be, this stuff is all new to you. And when you can find somebody that you can trust and rely on to give you professional information and treat you well, then you kind of feel good about that, and you want to stay in the family, as the car dealers like to say in their advertisements. So
keep it in the family.
Stay in the family. When you meet a loan officer from Pharus Home Mortgage and they're taking good care of you, and now you need some help from a real estate agent or you need some insurance, we can recommend somebody from within our Pharus Global family. You're certainly not required to use them, but it's nice to know that it's there, and you might feel comfortable using that service because you trust the person who recommended them to you. So that's a big value to clients, you know, much more than you would think for that peace of mind. But also for our employees, you know, we offer multiple revenue streams opportunities to earn commissions and referral fees, as allowed by law, of course, and with the appropriate disclosures. We always make sure we do all of that. But if you're a loan officer with a real estate license, you can actually run the mortgage side of the transaction, make a full commission on that. You can run the real estate side of the transaction, make a full commission on that. If you prefer not to do either or both of those, you can run one and refer the other. and still get some money out of it. So it's really an excellent opportunity. And if you happen to have an insurance license, I spoke to a candidate today, got a great background, mortgage license, real estate license, full insurance license, and he really understood and was excited about our ecosystem opportunity. So now you can also refer or actually sell, get commissions on insurances, property and casualty, as well as others, life insurance as applicable. So those are great. And then you've got other opportunities that don't need a license. Believe it or not, commercial mortgages do not require a license. So you'd be able to refer or even conduct the entire mortgage, commercial mortgage transaction yourself. If you're so inclined, you have the skill sets. Brian can help train you on that if that's something you like to do. But we don't hold anything back in our operations. So you can spend time learning curves and get involved with those other opportunities, which is great. Credit repair and business credit building. You can refer people to them and get some money out of that while you're helping your client, as well as Pharus Group, business management and consulting. If you happen to have a business person that you're working with that's buying a house, they also have a business and they're lamenting the fact that they had trouble with their payroll last week or they don't know how to do something at the business, we've got a solution for them as well. We refer them to Pharus Group and they get some help and you get a referral fee. So just to kind of finish this commercial, our world is growing and we're hiring. We're looking for loan officers. We're looking for realtors, experienced people, and others to join the team and grow with us. So we also have branch management opportunities all around Florida and North Carolina and coming soon, maybe some other states. We need serious professionals that know how to manage people and help with all of this growth that we're talking about. So that's the global ecosystem commercial. Back to you.
Boy, was that a mouthful, huh, Frankie? It all sounds really exciting. I know I'm excited. We had a lot of new things going on, even with the pandemic. Thank goodness, we've had quite a bit of expansion. I encourage anyone listening today that wants to learn more about those employment opportunities Frank talked about, contact me or Frank. Frank's information's right there on the screen. You can also find us at pharusglobal.com. If you're watching live, you're more than welcome to drop a comment, a question. Just say hello in the comments, questions. We're live right now on Facebook, LinkedIn, and YouTube. So we can say hello to everybody that wants to drop us a hi. Or if you have a question, put it out there. We'll be more than happy to answer it. And Frank, I understand you have a really important announcement for us today. What is that?
Wait, don't sign that purchase contract yet. That was my important announcement.
Why do you say that, Frank? Come on, give us more information.
I'll tell you why. And somebody's going to say, well, that seems to just be common sense. Why are you even telling us that? But here's why. Probably one of the biggest mistakes a home buyer can make, and I've been doing this a long time, and I've seen this happen way too many times. A biggest mistake is to sign a contract offer on a home before obtaining a pre-approval from a lender. Not just a pre-qualification. You can get pre-qualifications at any local Walgreens or candy store. We do them as well, but a pre-qualification is nowhere near as strong as a pre-approval from a lender. That's because once you sign the contract, the real estate contract, the clock is ticking. You have legal obligations and money at stake based on that contract's deadlines. You'll be putting up some earnest money, $1,000, $3,000, maybe $5,000 or more. And then there's another $400 or $500 for an appraisal, a few $100 for home inspection. Why would you put all that money at risk? And why be under the stress that your file may or may not be approved by the lender? We do a pretty good job up front of scraping a file, and we feel pretty confident with it. But still, why not get it pre-approved? It doesn't cost you anything. So besides all that money at risk, you also have peace of mind at risk. Once that clock starts ticking, you have to hope that the many players involved in a loan transaction are going to do what they need to do, and when they need to do it, in sync with the rest of the resources. In fact, we actually have a page on our website that I put in when we first designed the website that kind of says, the old saying, you don't want to see how the sausage is made. Well, it's kind of like that. In fact, here's an excerpt from that page on the website. It says, there are many companies and activities involved in getting a mortgage to a successful closing. Most loans involve a mortgage broker, a lender, real estate agent for the buyer, real estate agent for the seller, title company, appraisal company, survey company, insurance, inspection, and others. If it's a manufactured home, you might have to have an engineering certification inspection done. If you're a first-time home buyer, you got to schedule to go to a first-time home buyer class. So to coordinate all these participants and activities is a real challenge. Our very experienced processors do a great job, but even though most of those services are outside the control of a mortgage brokerage, so it's a highly complex process. So my point is, and it's a simple point, but so important, why would you jump onto that high-speed roller coaster without being completely approved, prepared, and ready to go? And I'll give you a better analogy for my golfing friends out there. And this applies in many things. So I go to the golf course, right? Pull up, park the car. Go inside. You have to pay inside. Maybe you grab a cup of coffee. You got to get the clubs, get them on the cart, take all the stuff out of the bag, put it in the cart, all prepared. Then you got to go up to the starter and give him your little ticket to show that you paid. All these things take place before you make the first swing, right?
True.
A leisurely pace, very no stress, just have fun. The weather's beautiful now, right now, especially. And then you get to the first tee box, and what happens? You got to tee off because there's guys lined up behind you. There's no stopping, right? It's the same with a real estate contract. Once you sign that contract, there's no going back. You got to go forward, and it's got to be done right. Otherwise, in our case, we just get yelled at or somebody hits a ball at us. But in your case, you might lose some money on a real estate contract or worse. So why not? It makes sense. So we can also, before you actually sign that contract, we can also be monitoring the rates. If we think we're in kind of a volatile period, you may want to just try to time your contract to when you think the rates are interesting as well. So we'll monitor the rates for you daily or as often as you like, and you'll be well informed. So now you may be, or at least you think you are, the best buyer with the highest credit score and the cleanest loan file in the history of mortgages. Well, I hope you are. But I can tell you, through many years of experience in this business, many buyers who feel that way end up with sometimes an annoying and sometimes a catastrophic issue on their credit report or in the loan file. It may just be a mistake, just has to be cleared up, okay? Or maybe something more serious that needs to be addressed. It's going to take some time. Our Pharus Credit Solutions can help you with the credit report stuff, and other things can come up too. So there's no reason to roll the dice. There's no reason at all. Yes, you might be the greatest buyer of all time. It's still no reason to jump in without getting a pre-approval because it doesn't cost you anything.
That's awesome information. But you mean credit bureaus might have incorrect information on there?
Holy, I know it's hard to believe, but it happens.
So I guess the bottom line is that people should be prepared so they're not teed off when they tee off, huh?
Oh, I like that. Absolutely. Absolutely.
So in actuality, what should our listeners do, Frank?
Well, so if you believe everything I just said, then it's very simple. Talk to us before you even think of signing a contract. Don't waste your time or your realtor's time running around looking at houses when you really don't know what sales price you qualify for or what the payments could be. Even though we give this advice, unfortunately, we've had clients that'll jump the gun and go put an offer on a house and then come to us for a loan. And it may turn out that if they had written their contract offer a little differently, they'd be able to get a little better deal and take advantage of the type of loan that they qualify for. So again, I'm going to be redundant, but it just doesn't make sense. But they didn't know because they didn't go through the pre-approval process first. So in fact, you should really talk to us at least 90 days before you think you're going to sign a contract.
And real quick, Pete Pravidi says, great info, Frankie.
Well, thank you, Pete.
Good to have you watching us, Pete. Thanks for being on the show. All right, so why is it, Frank, that you got to check all this information?
Well, I say 90 days because the reason is you have several options outside of a 60-day window that go away once your closing date is within that 60 days. It becomes very important if you're going to be using gift funds, if somebody's going to give you a gift of money to help with down payment, or money from a retirement account, or money that you may be acquiring in an unusual way, legally, of course, but still unusual, because Once you're in the 60 days, then all of those transactions show up on the last 2 months of your bank statements that the underwriter asks for. So if they see a deposit for $50,000 on your bank account, your checking account, they're going to ask where it came from. And it may be quite legit. Maybe a gift from Uncle Tony, God bless him. But now we've got to get gift letters. We've got to get Uncle Tony's bank statements. It's just a pain. And if it wasn't Uncle Tony, if it was somebody who wasn't a qualified gift giver to you, then the money won't be counted. So again, 60 days minimum, really 90 days makes the most sense, so we can make sure we can address those things. The other thing is there may be some kind of a credit repair type of issue, and it gives you plenty of time to get it done right without having to pay extra fees for rush service or whatever. And again, peace of mind. So unless there's an emergency reason why you need to buy a house in less than 60 days before you get a pre-approval, it makes no sense at all. You know, I hate to use the term no-brainer. I hate when people use that term, but I'm going to use it this time because this is a no-brainer. There's no reason that anybody can tell me why it doesn't make sense.
Absolutely. And one thing I would urge our people tuning in, if Uncle Tony is from New York, you might want to pay him back.
And right? Don't forget about it.
Forget about it. All right. So we have a question from Pete. Is there a big difference or benefit between 10-year and 15-year fixed mortgage?
Wow. Yeah, that's a great question. And I'll give you a quick answer. There's more discussion, but the shorter the number of years of the term, the lower the interest rate, but most likely the higher the payment. So again, depending on strategies, if the strategy is to minimize the cash flow, the payment, then you want to go for the longer term. If the strategy is you're going to sell the house in less than 10 years anyway, if you know that, if you're pretty confident about that, then the 10-year loan might make more sense because you're going to pay a lower rate. So it depends on what you're trying to accomplish and what your financial profile looks like.
Awesome. Great question, Pete. Thank you. All right. So Frank, we talked a lot about the pre-approval process. Realtors will love you for making sure that their clients are getting pre-approved. So what does that whole pre-approval process look like?
Okay. So it's real easy. So the first thing we have to do is complete an application. It's the standard 1003 application. It's been around for 30 years or more. It's had some changes to it, but they still call it the 1003, right? So we need that information. I like to say we need to take the colonoscopy to learn enough about you before we can make any recommendations.
Bad visual.
I'll come up with something better. But anyway, so we need that application. We can learn all the details of your financial profile, and not only that, because every loan officer you talk to is going to take a 1003. They're going to sit and talk with you about your lifestyle, your goals, your objectives, your timelines, where you need to be 5 years from now and 10 years from now. No. So we'll do all of that. So we want to act as your trusted advisor or as a mortgage consultant. And you wouldn't expect your doctor to issue you a prescription or schedule a surgery before they first take all of your vitals and do a complete diagnosis. It's the same thing, right? So we usually don't even need to run a credit report at first. This is an important point because we want to minimize hits on your score. So if it turns out you need to wait a few months before you qualify, before you're going to move forward, then at least we didn't impact your credit score too soon and then have to do it again in 2 or 3 months or so. And then based on the answers that you give us to the application questions and your estimate of your monthly debt, most people know what their minimum monthly debts are for car payments and credit cards and that kind of stuff. We'll be able to run the numbers, as I like to say, look at your income, look at your debt, look at the ratios, what your credit score might be, and talk about conventional versus FHA, whether you need down payment assistance, etc. Have all that discussion up front in a leisurely, non-stressed environment, of course. So we see what your options are, and then we can even give you a pretty detailed itemized fee worksheet, which shows all the estimates of all the fees and costs involved in a potential transaction and what the payment could be based on, look like based on our day's interest rate. So all this information you have in front of you may become eye-opening, right? Because you might say, oh, I didn't realize I had to pay $7,000 in closing costs, prepaid taxes, prepaid years of insurance, all this stuff. We don't want any surprises in our business. We want you to sit down at the closing table, relaxed, and signing paperwork with no surprises. So that's our goal. So if that all looks good, then and it's at least one option that meets your needs, then we can run your credit report and submit your file to one of our lenders for a pre-approval, or what they call a TBD, to be determined. In other words, the property address is to be determined because you don't have a contract yet. And it'll go into underwriting at the lender, just like a live file would. And in that case, you'll be credit underwritten by the lender, even before you put a contract offer on a house.
That's awesome.
We will provide you with a pre-approval letter, which will be a very helpful tool when negotiating with the seller. If they see that you're already credit pre-approved, the only outstanding issue would be if the property appraises and passes underwriting. That almost puts you on the same footing as a cash buyer.
Nice.
Also, by going through this pre-approval, by the way, I should mention, some you might say, well, a seller always prefers a cash buyer. Well, no, because when a buyer has to get a loan, then the seller knows that buyer has been tremendously vetted. So they know that they're a real good buyer, and they're going to show up at the closing table and do the deal. A cash buyer may say he's got cash, and for some reason you don't see him, comes time for closing. So that's important. So by going through the pre-approval process, you get to see the maximum sales price that you might qualify for and what the monthly payment could be. Some people will decide, even though they qualify for more, maybe they qualify for a $400,000 house, but the mortgage payment's going to be X. So they decide they're going to buy a $350,000 house, which is just good enough for them anyway, and the monthly payment is more in line with their goals. So again, it makes a lot of sense to do all that analysis right up front before the clock is ticking and you're on the golf course.
That's a really good point about cash buyer versus pre-approved mortgage buyer. So interesting. I never heard it put that way before. Real quick, if anybody has any questions that's watching again, please drop them in the comments. Frank will be happy to answer any questions you might have. Say hello to us, drop in and say hi. We're happy to talk. So Frank, you mentioned that you are mortgage consultants. Tell us a little bit about what that means.
Well, I've mentioned it a little bit, and I want to emphasize it again because it's really so important. You hear advertisements on TV about these certain companies. I won't mention any names, and they make it sound like you can push a few buttons on your cell phone and bingo bang, you got a mortgage for $250,000. Well, that's not reality. That's great marketing, but it's not reality. So the bottom line is, unless you got an 830 credit score, you've been in the same job for 20 years and you're making $300,000 a year, you're probably going to have to submit some documentation and go through some approval, some underwriting. So those quickie sources on the internet and on the television, they're not for real. So when you come to us, we're going to go through this whole process with you, like we said. And up front, it's a little painful because we're going to ask for some documents, and you're going to send me a bank statement with one page, the front page that shows the balance on it. But down the bottom, it says page 1 of 3. And I'm going to come back to you and say, I need the other 2 pages. And you're going to say, why? The third page is blank. And I'm going to say, because that's what the underwriters want. But we'll get through all that, and you'll be in good hands. And when we're done, then we'll be able to look at the loan options. So as a consultant, my goal is to show every option that might be available. And we've got some very interesting stuff. Way back when, I did a Live at 5 on the all-in-one loan, which is a tremendous, unique product for those that have a high-level financial profile. But anyway, we'll go through those things, stuff you may never even heard of or thought about before, and we'll bring it to your attention. And then we'll help you look at the pros and cons. A 30-year fixed mortgage is not always the best solution for somebody. Many times it is, but not every time. So you need to look at them all so you can make an informed decision. We'll review all the options in detail. You choose what's best for you. So again, our goal is to be as a mortgage consultant to our clients, just like the business consultants in our Pharus global companies who help their business clients improve their businesses. They'll review current financial scenarios, goals and objectives, timelines, and come up with strategies as applicable. So it's the same idea. So if we submit your file for an actual underwriting pre-approval, that could take 2 to 3 weeks, as most of the good lenders are really prioritizing purchases and refinances right now. But it'll be in line. It'll be in the queue. But even if we're still waiting for your TBD file to be underwritten, you end up finding a house that you just have to have, you love it, talk to us first. Make sure you prepare the contract offer so you take advantage of your loan criteria that we got your that we discussed with you. But you make that offer, then we'll take that purchase contract, we'll submit it to that lender, they'll convert it from a TBD file to a live purchase file, and we're off to the races. So the other great thing is we have technology. We'll keep you informed every step of the way, where the loan is and so forth. You're always welcome to contact us for information about status, but you just might find that you may not need to. So.
Really good stuff, Frank. I think mortgage consultant, to me, it's exciting because you're not a one-trick pony like a lot of lenders out there. You have a lot of tools in your belt to be able to help clients, different types of mortgages that people may not even think of. So I think that's important as well. Quick shout out to Angelo Veccarelli. He just liked the show. We appreciate that. Do you know Angelo, Frank?
I don't, but I like that name. Angelo, how you doing?
Angelo is one of the best DJs for many years, at least 10. We'll just go with that. Anyway, quick shout out to Angelo. Thanks for watching. So Frank, a lot of our viewers might be thinking, what in the world is a pre-approval going to cost?
$24,000.
Wow.
No, I'm kidding. Just wanted to make sure you're still paying attention. Actually, as you might imagine, the answer is zero, right? We don't charge any fees up front. And if we need to run your credit report, we won't charge you for that till closing. So if for some strange reason your loan doesn't get to closing, then you didn't pay for that. So there's no cost or obligation. We do a pre-approval as a professional service. We believe it's important for your sake and for ours and for your realtor. And also we feel like it endears you more so to us, and we like to welcome you to our Pharus Global family. So no cost.
That's awesome. Very cool. Well, I got to admit, the whole pre-approval process seems to be just plain common sense, right, Frank? And good business practice.
Yep.
I'd also strongly advise anyone looking for a home mortgage in the next 6 to 8 months to take advantage of this valuable service you offer at Pharus Home Mortgage. So I guess the next question is, how does one get started? What's the process?
Well, it's pretty easy. We have a link on our website. So if you go to pharushomemortgage.com and you go under the About Us teams, you'll see our loan officers there. I'm on there, and you can click a link there to enter your application information. That gives us about 95% of what we need. And by the way, when you do that, your credit report does not get run. In fact, we do not run anybody's credit report without written authorization. So even if you insist verbally, usually, unless it's an emergency, we won't run it. So get your information there. Or if you don't want to go to the website, just call us up and we'll email the link to you. In fact, I have the link right in the bottom of my email signature, so it's pretty easy to get at. And then after you've done that, we'll give you a call, ask you a few questions just to pull the whole file together. And if you're not web savvy or you just don't feel like getting on the internet to do anything like that, we could schedule about a 30-minute phone call, sometimes less, to get the information that we need from you, and we'll fill it out manually for you, and we'll enter it into our system. So we're also available evenings and weekends by appointment.
Very cool. It's great information, Frank. I'm glad you came on our Live at 5 to share it with the audience. By the way, does the process work for anyone looking for a loan in Florida?
That's a great question, because people think about getting a loan and they think about, the state that they're in. But basically, we can help anybody in the world who's contemplating buying a property in Florida. And it could be a primary residence, a second home. How come my hand's not showing up? There it is. Backwards. Could be a primary residence, a second home, even an investment property. So if you've got somebody overseas, maybe you're in Italy and you want to buy a vacation home in Florida, anywhere in Florida, we can do this whole process for you remotely, by internet, by email, of course, by phone, or as applicable. And then we get you all pre-approved before you even fly over here. Talk about taking away the stress, right? And if you're coming from Italy, bring me a pizza when you come over, will you?
Bring me a pizza with nothing.
A pizza. So yeah, it's anybody who wants to buy in Florida, no matter where they are, we can take care of them with this process.
Awesome. quick shout out to Tom Diebold. Great to see this info being made available. Tom is with Moby Pop. You can check him out. He's tuning in from LinkedIn. So thanks, Tom. We appreciate you viewing the show.
Hello, Tom.
All right. So, Frank, you've been talking about purchasing and refining a home. Does this process work for refinances, and also does it work for investment properties as well as home mortgages?
Yeah, I'm glad you mentioned that because we have been talking a lot about purchasing, but a refinance pretty much works the same way. We still want to get all your information, run the numbers, and let you know if it makes sense because you might be trying to refinance to reduce your rate. And many people assume that if they can go from a 4.25 to a 3, which is available nowadays, even less than 3, they naturally assume, hey, that must be good, right? Well, not necessarily. In fact, what we want to do is we want to look at your scenario, look at the type of loan that you'd be qualifying for, and then look at the closing costs associated with it, and then look at the savings per month on your monthly payment. So your return on investment may be 3 or 4 years. I've seen sometimes 5 years on a refinance, which is fine because if you now know that you're going to be staying in that house and in that new loan for 12 years or 7 years, whatever, then it makes sense.
Right.
But if it's going to take 4.5 years to pay back and you're moving in 5 or 3, then it probably doesn't make sense. We'd love to do business with you and make a commission, but we're going to advise you first what's right. And you're going to walk away saying, hey, those guys didn't get a loan from me because they told me, they helped me understand I really didn't need it. It didn't accomplish my objectives. So those guys are good guys. I'm going to tell all my friends about them. So, or you might be trying to take some cash out from the home. Again, same scenario. Is it worth the costs involved to get the cash that you want to take out to accomplish whatever it is you're trying to accomplish? And yes, that applies to refinancing applies to primary residences and second homes and vacation homes and investment property. Yeah, I forgot to mention that earlier on. Thank you. Investment properties as well. If you are an investor and you're looking to buy a single family home as an investment property or up to 4 units, right? You could get a duplex or triplex, whatever. Those are all investment properties that we can help you with. If you want to buy a commercial building or 5 or more units, you talk to Brian. But otherwise, we can help you. And it's the same process. And it's probably, I guess I'll say as important or more important because now you're making a business decision and putting money at risk in addition to whatever your personal living situation is. So, yeah, let's take a look at the scenario, run the numbers, make sure it's all going to work the way you hope it'll work before you sign any contracts.
Makes a lot of sense. And for all your mortgage loan officers out there, talk to Frank. We've got a lot of great opportunities. If you happen to be working for Pharus Home Mortgage and you're in front of a client that turns out that they have a commercial property to refi or purchase, you can still refer that and get paid commission on the commercial side as well, which makes it really fun and interesting. So,
when I talk to loan officers that I'm interviewing, which we are hiring right now, and we'd love to get some seasoned people on board to add to the team because of our growth. But when I'm talking to them, I tell them, your job title really is Pharus Global Representative, right? Not to be cute, but the whole idea of the multiple revenue stream is you as a salesperson, which is what these jobs are, a loan officer, real estate agent, insurance guy, you're a salesperson first, right? Like many jobs are. And what's that mean? It means that you need to be able to talk to somebody and listen to somebody consultatively about their situation, what their goals and needs are. So then you can formulate what's important to help them. It might be a mortgage loan, right? But it also might be some other things. So as a global representative, you've got your mind open to all the things that we have to offer, services that can help that client, and then you can bring them to their attention, as opposed to just thinking, hey, I'm a mortgage guy. What do you need for mortgage? Don't worry about the rest, So that's really important. And then you make more money, the client's satisfied, the company grows, everybody's happy.
Absolutely. Yeah, it's exciting times. Well, Frank, you got me all pumped up. I appreciate all this information. It was really solid, and I think it can help a lot of folks out there. So why don't we do a little recap? We talked a lot of stuff tonight. So
we did. We talked in Italian. We call it tutta la rose. But so here's a recap. So contact us first for an initial discussion regarding your goals and your timeline. Let us understand more about you. So gather your application information, review your options with you, and then we can submit you to the lender for pre-approval. Once we've done that, if you want to start shopping, you'll have a good idea of what you qualify for and what the payments will be, even if you don't wait for the final pre-approval, but at least you went through that process. So start shopping, engage with your realtor to visit houses that meet your criteria. And we work closely with realtors as much as you want us to. We don't. We only engage with them as much as you allow us to. We actually have some disclosures to that effect. But the point is that we can help them understand what is the best property for them to be looking at based on your profile and your financing conditions. And then when you're ready to submit an offer, before you submit the offer, even after you've been through the whole pre-approval, you found a great house, contact us, send us the address of that property. We'll do a quick research on taxes, insurance, flood zones, and other possible red flags. You know, like insurance nowadays is starting to tighten up on ages of roofs and types of plumbing material in the house. So let us have a shot at it before you actually sign a contract. We won't hold you up, but we'll hopefully get back to you very quickly and give you some advice and some comments. So the more the merrier, hopefully. And then we can adjust your pre-approval letter as well. So if you previously pre-qualified or pre-approved for $400,000 sales price, and we gave you that letter, and now you find a great house, you just love it, for $360,000, we can change our pre-approval letter to $360,000. Why should that seller know that you're qualified for more? They might not negotiate in good faith with you, right?
Good point.
So we can change that letter in a minute. We can't change it up, most likely, but we can change it down. So let us know so we can do that. And then you submit the offer along with that pre-approval letter. So the seller, and if the seller has a good listing agent working with them, they'll understand the importance of a pre-approval and the value of that. And they'll tell their seller, hey, these people are for real. They've been through it. They're underwritten. Now it's just up to the house appraising. So seller accepts your offer. Now you're on the golf course or you're on a roller coaster, but that's okay because you've already been pre-approved. So now you can go to the beach or go to the golf course or your favorite watering hole and leave the rest to us. We'll get you closed.
Love it. Love it. So I guess what's left, Frankie? How do people get in touch with you?
Well, you can see down the bottom of the screen. I like them when they do that on TV. They go like this, right? Yeah. They got my number down there, my email address, and give us a call. Go to the website. We've got all kinds of ways of getting in touch with us, and then we'll all be singing at the closing table.
We do have one last question that came in from Tom Diebold. What about bonds on a property?
What about what?
Bonds.
Oh, bonds. Not sure if I understand the question.
Tom, if you're still out there, can you give us a little bit more information?
Now, if you're talking about a bond, then it could be like a farmhouse, but a bond, then I'm not sure.
While we're waiting for Tom, Pete says that's a great point about adjusting the pre-approval letter.
Only your mortgage consultant will be able to do that for you. The guy on the internet and on the other end of the phone line in Indiana, they don't care.
All right, awesome. Well, not sure. Maybe we can talk offline, Tom. I don't see. Oh, wait.
Real time.
But wait, there's more. He's saying in tradition. I don't know. Still not sure what he means. Bonds on a property in tradition?
Well, I know in the tradition area, which, by the way, ladies and gentlemen from out of town, tradition is in Port St. Lucie, Florida. It's in the western end. It's the newest developments of Port St. Lucie. Lots of great development there, single family homes and all of our commercial and jobs corridor. Very exciting stuff going on there. But in tradition, that was one of those community development districts. I don't know if they still call it that, but they had to pass bonds to pay for all of the infrastructure, for the sewers and the lighting and the fiber optics. They spent millions of dollars. They, being the city, spent millions of dollars preparing that area to be able to be developed by the home builders, etc. So what happens is, in addition to your normal, I got to get that camera turned so my fingers go this way. In addition to your normal property taxes, there's also some additional money you pay each year on your tax bill to pay off those bonds that were used for all that infrastructure. And again, what we'll do is we'll take that information, because we know what it is when we're looking at an address or looking at an area, geography, and we'll build that into your pre-approval. So when you're looking at a monthly payment, don't forget you've got principal, you've got interest, you might have mortgage insurance, you've got escrow for homeowners insurance, you've got escrow for taxes, you've got homeowners association fees, all those things added together, and the bond money was usually in the tax bill, as Tom just mentioned. All of those things tied together is what goes into your ratios. It's not just the principal and interest. So we have to add it all together. And we'll look at all that when we're under the non-stress time of looking at properties and understanding them better. We can point those out to you. Thank you, Tom. Good question.
Absolutely. All right. Well, Frank, I think that's a wrap. I appreciate you joining us on the show tonight. A lot of great information.
Let me just ask one more thing. If you haven't already visited Pharus Home Mortgage on Facebook or LinkedIn, please do, and like us and follow us. And I have a separate Facebook page, the Singing Mortgage Guy Facebook page, which is my stuff, but also there's some good information there about reverse mortgages. So if you wouldn't mind liking that page, and we'll be able to give you good information that you get notified about as well. That would be great. Appreciate it.
So Frank, how'd you get the Singing Mortgage Guy nickname?
Well, I've been in the music business all my life, and I do some singing around town. And if you need $1 million mortgage, I'll come and sing at your house for your closest friends. Have a little cocktail party, a little pizza, we'll sing a few songs.
That's awesome. Well, again, thank you very much, Frank. You can see all of our companies at pharusglobal.com. Please, as Frank said, like our page. If you're on YouTube, hit that subscription button and the little bell, so this way you get notified when our next live show will be, which will be every Tuesday night.
It's going to be a tough act to follow, I got to tell you, though.
No doubt. Live at 5 every Tuesday night. Next Tuesday night, we will be talking about, what some people call the necessary evil, insurance. And we'll have Rudy Chacon on. Anybody that would like to appear on the show, feel free to reach out to me. Again, you can grab our information at pharusglobal.com. Happy to talk about your business and what you're doing in this day and age. So everybody, thank you for viewing the show tonight. Frank, thank you very much for joining us. Appreciate it.
Great. Appreciate it.
Have a good night, everybody.
Good night.